Stocks to buy now. Stocks I'm buying along with Sofi stock and PLTR stock. Hey there, fellow investors and tech enthusiasts. Welcome back to another exciting episode of our YouTube channel. Prepare for an exhilarating journey into the realm of finance. The stocks we'll be discussing today are not your typical companies. They serve as the cornerstone of a robust investment portfolio, providing stability during volatile market times. While the stock market is fraught with risks, fear not, for I'll reveal the strategies to protect and grow your wealth. We'll delve into 6 market gems tailored to yield substantial returns in the current landscape. So let's dive in. In a world witnessing a surge in renewable energy, the enduring sources of oil and natural gas remain foundational to the global economy. Enter Exxon Mobil, a company with a vision to power our future for generations to come. Picture this. On a pivotal October day, Exxon made a monumental move, acquiring Pioneer Natural Resources for an astonishing $59.5 billion. Pioneer holds valuable territory in the Permian Basin, a vast shale reservoir nestled in the American Southwest. With these assets, Exxon is poised to unleash a surge of production in the realm of domestic oil and gas. Already a titan in the energy sector, 2022 saw them net an astounding $55.7 billion in profit, partly due to soaring oil prices. The demand for liquefied natural gas is on the rise, and the company is embarking on promising ventures that will elevate its earnings to unprecedented heights. Moreover, Exxon is demonstrating prudence by investing in low-carbon energy solutions, including forays into hydrogen and renewable diesel. Keep an eye out for their innovative foray into carbon capture and storage, a groundbreaking process capable of effectively trapping over 90% of emissions from industrial facilities. As affirmed by the Center for Climate and Energy Solutions, this is a game changer. Exxon envisions that its low-carbon initiatives might one day outshine its oil and gas endeavors, potentially generating hundreds of billions in revenue. Indeed, this is a tale of both environmental responsibility and remarkable profit potential that will have you captivated. Shifting gears, recent events in Europe and the Middle East have emphasized the critical need for robust defense capabilities. Enter Lockheed Martin, represented by the ticker symbol LMT, a stalwart defender ready to safeguard the United States and its allies against a growing array of threats. The centerpiece of their arsenal is the F-35 stealth fighter jet, a linchpin in the security strategies of not only the US, but also 17 allied nations. But there's more. Lockheed's inventory includes an impressive array of satellites, helicopters, cargo planes, and an extensive suite of defensive systems. This, my dear friends, provides protection not only for nations, but also for your investment portfolio. With a substantial cash flow, boasting an impressive $6.1 billion in 2022 alone, Lockheed has proven to be a dependable source of dividend income for its shareholders. Additionally, the company's commitment to stock buybacks further bolsters the rise of its share price. Brace yourselves for the forthcoming dividend increases that will benefit investors in the years ahead. Lockheed's substantial order backlog, reaching a monumental $158 billion by the close of the second quarter, paints a clear picture of future cash flow, a significant portion of which is set to be returned to shareholders in the form of dividends. Now let's move on to my next stock recommendation. In the midst of this turbulent market, opportunities await those with the courage to stand firm. The illustrious Warren Buffett, a master at identifying undervalued treasures in uncertain times, has orchestrated the symphony of success known as Berkshire Hathaway. With over 60 subsidiaries spanning a diverse range of industries, this financial powerhouse generates an impressive $25 billion in free cash flow each year. And if that weren't enough, Berkshire's balance sheet boasts a formidable reserve of over $140 billion in cash as of June 30th, providing a strong defense against financial storms. Moreover, the Oracle of Omaha, along with his trusted team, strategically deploys this treasure trove to acquire undervalued assets and integrate them into the Berkshire portfolio. With a sharp focus on high-quality companies poised for growth, this dynamic approach has consistently enriched Berkshire's long-term shareholders. Therefore, investors should view this as an invaluable opportunity to align themselves with the legendary Warren Buffett. By investing in BRKB, it's akin to having Warren Buffett himself overseeing your investment. Now let's delve into Shopify. If you believe the Shopify narrative had reached a plateau, think again. This e-commerce powerhouse has shaken off any signs of stagnation and is forging ahead with renewed vigor. In Q2, sales surged at a remarkable rate of 31% year over year, surpassing expectations and igniting excitement in the market. The secret behind this resurgence? Merchants have wholeheartedly embraced Shopify's versatile platform, capable of managing a wide array of business functions. This affection is evident in the company's expanding user base and the impressive rise in subscription and payments processing revenue. But wait, there's more. The real game changer is the growing enthusiasm surrounding artificial intelligence and its integration into Shopify's platform. Investors are thrilled about the potential of AI to enhance Shopify's capabilities, and it's already demonstrating its effectiveness with popular features like the Commerce Assistant. While there may be uncertainties about the long-term returns on these investments, one thing is certain: AI is poised to amplify the value of Shopify's services. Coupled with the company's steady progress towards profitability, this sets the stage for potentially explosive returns for shareholders in the coming years. Next in line is Home Depot, an unexpected heavyweight quietly operating one of the busiest digital sales platforms in the country. With an impressive $160 billion in annual sales, Home Depot's e-commerce segment is far from a mere sideline, contributing a notable 14% to the total last year. It's true that the stock faced some challenges in 2023, driven by concerns that higher interest rates might exert pressure on the business in 2024 and beyond. And yes, revenue is expected to dip slightly this year, as homeowners scale back on larger projects. However, the long-term outlook for the housing market shines brightly, thanks to factors like shifting demographics, rising home prices, and an aging housing inventory. Both Home Depot and its competitor Lowe's have emphasized these advantages in their recent earnings reports. Absolutely. Home Depot is not only affirming its growth trajectory, but also aiming for an operating profit margin exceeding 14% this year. What's even more enticing is their continuously expanding dividend program, promising even more appealing returns for investors in the years ahead. Lastly, we come to Amazon, a perennial strong contender for your stock portfolio. Amazon's e-commerce arm has soared to an impressive $116 billion in the first half of 2023, up from $113 billion just a year ago. Yet, the most thrilling part of this narrative lies in Amazon's cloud services division, which has surged to $146 billion from $125 billion, now constituting a formidable 56% of Amazon's overall revenue. While critics might highlight that Amazon's profitability doesn't quite match tech giants like Microsoft, the tides appear to be shifting. Recent cash flow trends and the rapid growth in the services sector suggest that Amazon is on the brink of achieving double-digit margins. With expansive potential for growth in massive markets like e-commerce and web services, it's entirely conceivable to envision significantly higher annual earnings in just a few short years. Amazon is a valuable investment choice, offering both short-term and long-term potential for growth. So there you have it, the top 6 stocks to consider in today's market. These 3 heavyweight companies are positioned to make your investment journey a highly profitable one. Each of these firms is primed for exciting stock price appreciation, and in some cases, substantial dividend growth. With wise investment choices, you could find yourself on the fast track to remarkable returns. Seize this moment and venture further into your financial journey. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing.